Hello and welcome to this week's crypto update. So what's been happening in the macro and how does it affect crypto and risk on assets? So I suppose it's a week of numbers. First thing is 25. This week we've seen a 25 basis point rate cut on Wednesday, the first cut since December 2024. This is what the market has been waiting for quite a while. There's been talk literally since the end of last year as to when there would be more rate cuts throughout the year. There was many predictions that there'd be 3, 4, 5, 6, 7 of them throughout this year. We've had none to date until just now. So Jerome Powell has announced that there's going to be a 25 basis rate cut. How did the markets react? Well, they didn't. Bitcoin, the S&P, etc. didn't really move up or down. Why is this? Well, as predicted, if we had a 25 basis rate cut, which everyone was predicting we would have, in fact, it had a 96% certainty of happening, well then, when something's that certain of happening before it happens, the market already has a price in. And so when it happens, it doesn't really move the market. So what were people looking out for more than the 25 basis rate cut? They wanted to know, was there going to be more rate cuts before the end of the year? There's 2 more Fed meetings. People were looking to see, was there signs that there would be more rate cuts coming in those 2 meetings? And certainly from the meeting itself, it appeared that it was pretty much certain that there would be 2 more rate cuts. This would be seen as very positive. It wouldn't have already been priced in. And so you would expect to see the market move reasonably strongly in a positive direction off the back of that. But that didn't happen. What happened? Well, they also released the dot plot. The dot plot is a sign of where the Fed members, 18 of them, think rate cuts will go over the coming months. And within that, there was 9 who predicted or are predicting that there will be 2 more rate cuts this year. However, the other 9 have put in either 1 or less. Now that looks like it's sort of half and half between, we might have 2, we might have 1. But actually, if you look at the numbers a little bit deeper, it's not quite as clear as that because it's 1 or less. And of those 9, only 2 are expecting 1 rate cut before the end of the year. 6 are predicting no rate cut, and 1, in fact, was even predicting a rate hike before the end of the year. So it's not quite even. So what that does is it's put a lot of uncertainty back into the market as to whether there'll be rate cuts or not before the end of the year. And so this is why, people were looking towards this meeting to see, yes, they expected a 25 basis rate cut. They got that. It was expected. But were they going to be dovish? Was it going to be highly likely we'd see more rate cuts? And that certainly hasn't given any certainty on what's happening. And therefore, the markets didn't really move up or down. On top of that, Powell came out, and within his statements, he put even more of a damper to that because he said the rate cut was a risk management cut. In other words, it wasn't the start of a rate cutting cycle. It was literally a case of, well, we can see the job numbers have got a lot weaker than we had expected, and so we're putting this in there to try and stave off that getting any worse. But also, they're still keeping an eye on, inflation. And they've stated that, inflation isn't as high or as quick, or the rate of increase of inflation isn't as quick as they were expecting. And so, this has given them room to make this cut, but they're still concerned that the tariffs will come through and create that inflation. So they're just trying to balance it. And in their own words, in his own words, there are no risk-free paths now. It's not incredibly obvious what to do. In other words, we don't know what to do. So they've just basically come out and go, we're giving this 25 rate basis cut. Hopefully that'll help the economy. We're seen to be trying to do something about that, but we're still worried about inflation, and so we're not sure what's going to happen. And so we're back to meeting by meeting. And so, I think at this stage, it's, 2 cuts between here and the end of the year is probably sort of a 50-50 at the minute. Having 1 more before the end of the year, I think is, 80% chance or more. So it's highly likely to see 1 more. Of course, the market wants 2 more, and what we've got on the back of prices with all of that is a whole lot of not too sure. So markets didn't move. So where does that take us? Well, with regards to crypto, how are we set up, and is it likely we see altcoin season? Well, we're about 1.5 years on from the Bitcoin halving. Traditionally, that can be very positive for Bitcoin, and it rolls down then from Bitcoin to Ethereum to the likes of Solana and out into the top 10, top 20, and further down as it progresses, as that altcoin season comes in. Are we moving towards altcoin season? Well, we've never had, the stars align more than they've aligned for crypto right now. We have institutional money coming in huge quantities. We have public companies creating treasuries around different projects. We have ETFs already in place for Bitcoin and Ethereum. Many are expecting quite a number more of them to be put through between here and the end of the year and start into the following year. So more potential for more and more money to come into the crypto space. On top of that, we have more and more publicly traded companies coming out with a treasury strategy for various cryptocurrencies, whether that's Bitcoin or Ethereum. Now we're starting to see it in others as well, like Solana. Just recently, quite a lot of money be pumped in there. So we're starting to see money funnel into crypto in a huge way. Is there risk factors out there? Absolutely. If the economy, if we have a black swan and the economy goes into recession, of course, that's going to be very difficult for the markets and for risk on assets. But that aside, everything else is absolutely pointing towards altcoin season. Traditionally, August, September can be slow, but as you move out to the end of September and into October, November, they tend to be the best months of the year for risk on and crypto assets alike. And so, is altcoin season here? Well, altcoin season, what does it look like? It looks like if everything lines up and the stars all align, then you start to see the rotation from Bitcoin into Ethereum and to the others. Is that starting to happen? I would argue absolutely yes. We've seen Bitcoin go on a huge run. It's currently, not too far at all-time highs, and many expected to make another run. Ethereum has come from under $1,500 to an all-time high. BNB has hit an all-time high and has hit $1,000 for the first time in its history. Solana is starting to make a move, and by market cap, it's actually been an all-time high. By price, it's getting close. Are we starting to see the rotation? Well, here's an interesting number. Bitcoin has moved 3% up in the last month. Ethereum has moved 7%. Obviously, that's bigger. You go further out the risk curve, you go to BNB. That's moved by 20%. Take another step out the risk curve. Solana, 34%. Another step out the risk curve. Avalanche, 49%. All in the last month. What does that suggest? It looks like money is starting to rotate and move into the large altcoins. And what tends to happen is there's opportunity within those projects and their ecosystem. And so now is certainly a time where it's very valuable to have yourself understand what it is you want to buy into if you're not already in there, and start to consider making those allocations. I'll be putting out a video over the weekend of some of the ecosystem projects within that space that are one step outside the risk curve, still probably at the overall safer end of crypto, but certainly has significant upside potential, as well as the main chain coins themselves, the actual ecosystem within them. So watch out for that video over the weekend. Also, into next week, I plan on doing a video on the overall macro and how you might best position yourself so that you are positioned if there is a downside in place, but because you have that in place, then if you have that in place, it allows you to go a little bit further out the risk curve if that is your desire to do so. So watch out for those upcoming videos. Hopefully you found all that useful, and we'll talk to you all on the next one.